Does the market have a right to seem or be this optimistic given the headlines over the weekend?
Well, I would say that, given the outlook for the Fed, 6 months ago, the outlook was for more rate cuts. And so clearly those tables have turned. And with the expectation for rate cuts now looking ahead as opposed to rate hikes, I would say that the outlook is pretty favorable. 2% 10 years is not a great alternative relative to equities. So, if you look at the valuation for today's equity market at 17, 18 times earnings, that looks pretty reasonable to me in light of a 2% 10 year. Yeah. So, I think the rally we've seen to date has been justified.
In math, I'm going back to high school here. You multiply two negatives, you get a positive. I do wonder, though, Mark, is two positives a negative? What I mean by that is if we get this trade deal, if we get this breakthrough, do we still need then the rate cuts that the market is not only expecting but basically begging for?
Well, the markets, I would say, bullied the Fed to turn neutral, and that was more driven by the equity markets in the fourth quarter. And this year, I would say the bond market is trying to bully the Fed by inverting the curve, pushing 10-year yields below T-bill yields. So I do think the bond market is trying to push the Fed around at this point. But the history for this Federal Reserve since the financial crisis is it never really disappoints in terms of investor expectations for a rate move. So I would be very surprised if the consensus is so high for a rate cut in July that they don't move by 25 basis points.
You think they're almost the Fed is backed into a corner now, Mark?
I think they have. And I do think it's likely now that the Trump administration is probably going to delay any type of a big trade agreement with China beyond the July meeting date for the FOMC, basically to have his cake and eat it too. I think he would expect a rate cut by the Fed in July if a trade deal is not done. And then if he does a trade deal after July, that would basically be two positives for the economy heading into next year and heading into the election.
All right, listen, we got 4th of July. It's a big holiday week, holiday shortened week. Help us make some money this week. Where does Penn Mutual see good places to invest right now? Where is there still value?
Well, we focus really on the fixed income markets, and even though clearly with 10-year treasuries at 2%, I would say the opportunity set is somewhat diminished relative to where we were 7 or 8 months ago. However, we still do see opportunities in certain parts of the structured security market, commercial mortgage-backed securities, certain highly rated collateralized loan obligations we view as relatively attractive here. So, we think there are opportunities to add value in the world of fixed income, even in light of where treasury yields sit today.